Welcome to the deep dive. Today we're tackling maximum extractable value, or MEV.
Right, MEV.
It's something you see on smart contract blockchains, and maybe best described as an emergent phenomenon.
Yeah.
Happens when people actually start using these systems heavily.
That's a good way to put it, yeah. Simply put, MEV is, well, it's the extra value that block producers can grab.
Block producers. So miners back in the day, now validators on Ethereum since the merge.
Exactly. And they capture this value by strategically playing with transaction order. They can reorder, include, or even exclude transactions within the blocks they build.
Okay, so initially I think the understanding was it covered things like reordering transactions for profit, maybe even censoring some.
Right.
And definitely inserting their own transactions, especially for arbitrage on DXs, right? Decentralized exchanges.
Precisely. And it started out, relatively simple. Basic arbitrage was kind of the first wave.
But it's gotten way more complex since then.
Oh, absolutely. It's evolved rapidly. Now we're talking about really sophisticated strategies. Things like generalized front-running.
Where bots see a big trade coming and jump in front.
Exactly. They anticipate it, slip their own transaction in first, and skim the profit. We also see complex liquidations on lending platforms, cross-domain arbitrage happening between different chains.
Wow.
Even stuff like NFT sniping, trying to grab rare NFTs the moment they drop. The complexity has really shot up.
And I guess with more complexity comes, well, more potential problems, more instability, which is where Slashbots comes in, I understand.
That's right. Flashbots is primarily a research organization, and they've been quite vocal, identifying MEV as potentially the single biggest centralization risk for crypto.
That's a huge claim.
It is. But their concern is fundamental.
Yeah.
If the basic design of these blockchains doesn't properly account for MEV, it could really degrade the user experience and, more critically, lead to power concentrating in fewer hands.
Okay, so for our audience developers who, have a decent grasp of blockchain tech, Ethereum, specifically, our mission today is to really get under the hood of MEV.
Right.
Understand its impact, how Flashbots is trying to tackle it with their research, their tools, and what it all means for Ethereum now and going forward, especially for us, the people actually building on this stuff.
Exactly. We want to go beyond just the definitions. We need to dig into the nuances, the trade-offs that come with different solutions, and where this might all be heading.
Right. So maybe to help build a mental model first, the mem pool, right? That staging area for pending transactions.
Yeah, the transaction pool.
Okay, think of that like a really busy, chaotic trading floor.
Okay.
MEV then is like some traders, the validators in this case, who have this privileged view, they see all the orders coming in before they get finalized.
And they can rearrange them.
Yeah, or slip their own orders in ahead of others to guarantee a profit.
Right.
Which, sometimes means other traders, that's us, the users get a worse price or slower execution.
That's a pretty helpful analogy, actually, especially for developers thinking about transaction flow. So, given you already understand the basics of blocks in Ethereum, we can probably start layering in the more technical stuff now, how MEV grew and how Flashbots responded.
Okay, let's do it. Let's rewind a bit. Early days, say pre-2020. You mentioned basic arbitrage.
Right. That's always been around, really. If ETH had a slightly different price on Uniswap versus, say, Balancer.
Someone would jump in.
Exactly. Bots would buy low on one, sell high on the other, capture that small spread. It's a classic arbitrage play.
And in a way, that kind of activity isn't necessarily bad, is it? It helps keep things aligned.
No, you're right. It serves a purpose. This kind of arbitrage helps balance liquidity pools, keeps prices consistent across different DXs, and can even make things like liquidations on lending platforms happen faster. So yeah, it contributes to overall market efficiency.
So like a good MEV almost keeps the DeFi engine running smoothly. But I do remember hearing about other early stuff like people sniping ICO tokens.
Oh, yeah.
Or opportunities on really early DeFi apps like Bancor or Ether Delta. Was that MEV too?
Definitely. Those were earlier, maybe less sophisticated forms of MEV. It felt more like hobbyist MEV back then. Not that many people were doing it systematically.
Right.
The real explosion in MEV activity, the industrialization of it, really took off with the DeFi summer in 2020 when usage just skyrocketed.
DeFi summer. Yeah, that changed everything. Okay, so let's talk about the downsides then. Even if some arbitrage is healthy, there's clearly a darker side, these systemic risks Flashbots worries about.
Right.
What are the main ways MEV gets extracted that cause problems for the network for users?
Well, there are broadly three main categories of, let's call it, harmful MEV extraction, each with negative externalities. First, you have what people call spam wars.
Spam wars.
Yeah, imagine multiple bots see the same juicy arbitrage opportunity. They all desperately want it. So what do? They flood the network, submitting tons and tons of transactions, hoping theirs is the one that gets picked.
Okay, I can see how that's bad. Clugs everything up.
Exactly. It creates massive network congestion, drives gas fees through the roof for everyone, and can basically price out regular users who just want to do a simple transfer or swap.
Super frustrating if you're just trying to use the network normally. Okay, what's the second harmful way?
The second is latency wars. Speed is absolutely critical for capturing a lot of MEV. If you see an opportunity, you need to get your transaction to the block producer fast.
Faster than the competition.
Precisely. So this creates a massive incentive for MEV operators to co-locate their servers, physically put their machines right next to the validator's machines.
Like high-frequency trading in traditional finance.
Exactly like that. And this intense competition for the best location, the lowest latency connection, it inevitably leads to centralization pressure at the validator level. Only the biggest players with the most resources can afford the best spots.
Right, so it advantages the wealthy and well-connected, potentially squeezing out smaller validators or solo stakers, not very decentralized.
Yeah.
What's a third category?
The third approach, and this is the one Flashbots has really championed as a solution, is the idea of block space auctions.
Auctions for block space.
Yeah. The core idea is to move away from the chaos and inefficiency of spam wars and latency wars. Instead, you allow validators to essentially outsource the job of building the most profitable block
Outsource it to whom?
to specialized third parties. They're often called searchers or, more recently, builders. These builders compete by analyzing the mempool, finding MEV, constructing an optimal block, and then bidding for the right to have their block included by the validator.
Interesting. So instead of a physical race for speed, it becomes an economic competition who can build the most valuable block and offer the validator the biggest cut.
That's the gist of it. Flashbots saw this as a way to channel the competition constructively, avoiding what they called the MEV dystopia,
The dystopia being.
where blockchains end up looking just like traditional finance, dominated by insiders with latency advantages and opaque deals, undermining the whole point of decentralization and permissionless access.
Okay, that makes sense. So let's get into how Flashbots actually tackle this, starting back in the proof of work days. What was the normal block creation process then, and how did MEV operators initially fit in?
Sure. So originally, you, as a user, would send your transaction out to the Ethereum network. It would land in this big pool, the mempool, with lots of other pending transactions.
Right.
Miners would look at this pool and pick transactions to include in the next block they were trying to mine. Usually, they'd prioritize the ones offering the highest gas price, the biggest fee.
And we had wallets like MetaMask, DXs like Uniswap, nodes like Infura helping users create and send those transactions. That's the wallet layer, right?
Exactly. That infrastructure layer made it easier for users. Then MEV operators started watching that public mempool very closely.
Looking for those arbitrage chances, front-running opportunities.
Precisely. When they spotted one, they'd quickly craft their own transaction, maybe one to jump ahead of a big DX trade, or one to execute an arbitrage and send it out, hoping it would get mined in the right order relative to the target transaction.
Sounds pretty cutthroat. And probably led to those spam wars you mentioned, everyone blasting transactions hoping to get lucky.
It did. It was inefficient. Gas prices would spike unpredictably. And the more sophisticated MEV players quickly realized there was a better way, for them at least. They started setting up private side channels.
Side channels.
Yeah, direct communication links to miners, or more accurately, mining tools. They could send their MEV transaction bundles directly to the pool, completely bypassing the public mempool.
Ah, so private off-chain agreements. Doesn't sound very transparent or fair to everyone else.
It wasn't. It risked creating an opaque system where large pools could cut exclusive deals with big trading firms, locking everyone else out. And that lack of transparency, that potential for centralization, that's exactly what Flashbots set out to fix with their first major tool, MEV Geth.
MEV Geth, so a modified version of Geth, a Go Ethereum client software that most miners were running.
Exactly, a fork of Geth.
What did it actually do? How did it change things?
MEV Geth introduced what they called a sealed bid block space auction mechanism. It sounds complicated, but the core idea was pretty neat.
Okay.
It allowed these MEV searchers to package their transactions into bundles. A bundle might contain, say, the user's transaction they want to arbitrage, plus the searcher's own transaction to capture the value.
Okay.
They'd send this bundle directly to miners running MEV Geth. Crucially, the bundle included a private bid, how much the searcher was willing to pay the miner if that bundle was included in the block exactly as specified. And initially, the contents were hidden from the miner until they actually won the auction.
Sealed bid. Okay. So it formalized that messy side channel stuff, brought it out into a more structured system.
Yes, exactly. It created a more open, permissionless, and transparent marketplace for this valuable block space. It aimed to prevent those exclusive backroom deals between big miners and big traders.
So any miner running MEV Geth could receive bids, and any searcher could submit them.
That was the goal. Foster competition. Let the market discover the actual price or value of including certain transactions or bundles in a block.
And technically, it wasn't a massive overhaul of the Geth code, was it? I remember reading it was surprisingly concise.
That's right. It was remarkably elegant, something like only 100 lines of code added to Geth, but the impact was huge.
And adoption was high.
Very high. Because it worked and offered miners extra revenue transparently, it got adopted by something like 90% of the Ethereum hash rate towards the end of proof of work.
Wow. So Flashbots with MEV Geth really acted as this kind of silent guardian almost, protecting Ethereum from some of the worst centralizing effects of MEV during the POW era.
You could definitely see it that way, a crucial intervention. But then, of course, came the merge. Ethereum switched to proof of stake.
Right. Miners out, validators in. The whole block production mechanism changed.
And so Flashbot's approach had to evolve too. The dynamics are different under proof of stake.
Which brings us to Proposer-Builder Separation, PBS. This seems like the foundational concept for handling MEV in the proof-of-stake world.
Absolutely. PBS is a core idea, aiming to formally separate the roles involved in creating a block. Instead of one entity, the validator, doing everything, choosing transactions, ordering them, proposing the block.
You split the job.
Exactly. You split it into two distinct roles, the block proposer and the block builder.
Okay, so the block proposer, that's just the regular Ethereum validator, right? Someone who staked their 32 ETH.
Correct. That's your standard validator selected by the consensus protocol to propose the next block. Their main job is still proposing.
But they don't build the block anymore.
In the full PBS vision, no. They essentially outsource the complex task of actually constructing the blocks, selecting transactions, ordering them for maximum value to these specialized block builders.
And these block builders, what's their deal? Are they validators too?
Not necessarily. They're specialized entities. Their entire focus is optimizing block construction. They gather transactions from all over the public mempool, private order flow from searchers, maybe even directly from users or applications.
And they crunch the numbers to build the most profitable block possible.
Precisely. They figure out the optimal ordering, include profitable MEV bundles, and calculate the total value extracted MEV plus transaction fees.
So the proposer basically puts out a request, hey, I'm up next, who can build me the most valuable block? And the builders compete with bids.
That's the core mechanism. And MEV Boost is the software that makes this happen right now, post-merge. It acts as a sort of intermediary protocol.
Why intermediary?
Because full PBS, integrated directly into Ethereum's core consensus rules, enshrined PBS, is still under development. MEV Boost uses something called the Builder API, basically a standardized way for proposers and builders to communicate as a temporary off-protocol solution until enshrined PBS is ready.
Okay, got it. So MEV Boost bridges the gap. How does it work? Step by step.
Okay, so a validator gets chosen to propose the next block. Their software, running MEV Boost, immediately reaches out to a network of registered block builders through relays. Think of relays as trusted middlemen initially.
Okay.
The validator asks for bids. Builders respond quickly. Their bid includes two main things: the header of the block they've built, a cryptographic summary, not the full contents, and the payment in ETH they're willing to give the validator if their block is chosen.
So the validator sees multiple bids, each with a block header and a price tag.
Right. The validator, acting rationally, simply picks the bid offering the highest payment. Purely economic decision.
But they still don't have the actual block, just the header and the promise of payment. What happens next?
So the validator takes the winning header, signs it with their validator key, and puts it into what's called a blinded beacon block proposal. Blinded because it doesn't contain the actual transactions yet.
They send this blinded proposal where? Back to the builder.
Usually through the relay again. The relay verifies the signature and forwards it to the winning builder. The builder sees the signed header, knows their block was chosen, and only then reveals the full block contents the execution payload back to the relay, which passes it to the validator.
Ah, okay, so the builder only reveals the valuable block after the validator has committed to proposing it.
Exactly. The validator then combines this execution payload with their signed header, creating the full finalized block and broadcasts it to the Ethereum network.
That blinding part seems really important. The proposer doesn't even know exactly what transactions are in the block they're proposing until the very last second.
It's a key design choice for censorship resistance. The proposer can't easily censor specific transactions because they select the block based only on the bid value, without inspecting the contents beforehand.
And you mentioned MEV Boost aims to be more permissionless than MEV Geth. How so?
Because any validator, even a small solo staker running just one validator node, can install MEV Boost and immediately start receiving bids from this competitive builder network. They don't need sophisticated infrastructure or private deals. It levels the playing field for earning MEV rewards.
Makes sense. And people can track the adoption and activity.
Yep. Flashbots maintains a public dashboard at boost.flashbots.net where you can see which validators are using MEV Boost, which relays are active, how many blocks are being built this way. It's pretty transparent.
This whole design seems really anchored in that idea. Flashbots talks about incentive compatibility. Can you expand on that? How does it apply here?
Sure. Incentive compatibility just means designing the system so that everyone acting in their own rational self-interest naturally leads to good outcomes for the network as a whole.
Okay.
With MEV Boost, the validator's self-interest is clear. Maximize rewards. They do that by picking the highest bid from a builder. Simple. The builder's self-interest is also clear. Win the auction. They do that by building the most valuable block possible and offering the validator a competitive share of that value.
So the incentives align.
That's the goal. The pursuit of MEV, which could be destabilizing, is channeled into this auction mechanism. And critically, by making it easy for all validators, including solo stakers, to capture these MEV rewards, it helps prevent MEV revenue from becoming concentrated in just a few large staking pools or requiring those opaque deals we worried about earlier. It preserves decentralization.
This obviously has some major knock-on effects for the whole Ethereum ecosystem. Let's talk staking rewards first. The merge drastically cut ETH issuance, right?
Massively. The triple halving, they called it.
So that makes the other sources of validator income, like tips and MEV, way more important proportionally.
Absolutely crucial. Before the merge, there were some estimates, maybe a bit outdated now. Market conditions changed fast, suggesting MEV could eventually make up like 60% or even more of total validator rewards.
Wow, 60%.
Yeah, though take that with a grain of salt. EIP 15559 burning ETH affects things. Market volatility affects things. But the core point holds. MEV, unlocked systematically via MEV Boost, is expected to provide a significant boost to the overall APY, the annual return, for anyone staking ETH.
Which makes staking more attractive, strengthens network security, a positive feedback loop.
That's the idea, a strong economic incentive for validators to run MEV Boost and participate.
Okay, beyond just higher APY, are there other, maybe less obvious benefits emerging from MEV Boost and PBS? You hear talk of happy byproducts.
Yeah, there are some really exciting potential side effects. One of the biggest is how it could enable account abstraction.
Ah, the holy grail for user experience. How does MEV Boost help there?
Well, because builders have much more flexibility in how they construct blocks compared to the old monolithic approach, they can potentially include transactions that don't follow the rigid traditional Ethereum format.
Like what?
Like transactions where the user pays the gas fee in a stablecoin, maybe USDC instead of ETH. Or transactions authorized by different signature schemes, not just the standard ECDSA. The builder could handle the complexity behind the scenes, like swapping the USDC for ETH to pay the base protocol fee.
So the builder's flexibility unlocks UX improvements that are hard to do at the core protocol level.
Exactly. By decoupling block building from the core proposer role, you create the space for innovation at the builder level. It could be huge for onboarding the next wave of users.
That is exciting. Any other potential upsides?
Well, you could also imagine builders offering specialized services, maybe features for transaction cancellations if you accidentally send something. Maybe there's a way to pay a builder premium to include a canceling transaction quickly.
Or like emergency rescues.
Yeah, White Hat Fund rescues. If a vulnerability is found, a builder could potentially help execute a complex rescue operation within a single block. Also, builders might even compete by offering features that help protocols mitigate harmful MEV against their users, like offering front-running protection as a service.
These are really powerful potential benefits. But
Yeah.
let's talk risks. We solved potential centralization at the proposer level, maybe, but haven't we just shifted the risk to the builders? What if only a few huge builders dominate the market?
That is the central concern right now. It's a totally valid point. PBS inherently creates a trade-off. You potentially decentralize proposing power, but you risk centralizing block building power.
And if builders get too centralized, they can censor transactions, demand higher fees, all the bad stuff.
Exactly. A dominant builder or a cartel of builders could theoretically decide not to include certain types of transactions or transactions involving specific addresses. That's a serious threat to censorship resistance.
So what's the strategy to prevent that? How do we keep the builder space competitive and decentralized?
Flashbots is very focused on this. Their main strategy is fostering an open, competitive ecosystem. They're committed to open sourcing their own builder software and related infrastructure.
To lower the barrier to entry for new builders.
Right. Encourage competition, support diversity. They acknowledge that markets often follow a power law. A few big players get most of the action, but their goal is to keep that distribution as flat as possible. More builders, more relays, more geographic diversity all contribute to resilience against censorship and control. It's an ongoing effort.
A constant balancing act, it sounds like. Okay, what about layer 2s? Rollups like Optimism, Arbitrum, ZK Sync. Does MEV exist there too?
Oh, absolutely. Wherever you have significant DeFi activity, you'll have MEV. As L2s attract more volume and complex applications, MEV opportunities will inevitably arise within those systems too.
But many L2s currently have centralized sequencers, right? Doesn't that change the MEV dynamic?
It does initially. A centralized sequencer can potentially mitigate or capture MEV themselves, perhaps in non-transparent ways. But the long-term goal for nearly all major L2s is decentralized sequencing.
And once sequencing is decentralized.
MEV comes roaring back as a major consideration, much like on L1. You'll need mechanisms to handle it, maybe MEV auctions tailored for L2s, maybe different proposer builder roles. The solutions might look different from L1 MEV boost because L2 architectures vary, but the core problem reappears.
Interesting. And there are trade-offs there too, I imagine, like between performance and MEV.
Definitely. Some L2s might push for very high gas limits to maximize throughput, but that could also open the door for MEV searchers to submit tons of speculative transactions, potentially wasting block space if many of them fail or revert. Finding the right balance is key.
It feels like layers upon layers of complexity. I know Flashbots isn't just working on MEV Boost. They also have this project called Suave. How does that fit into this picture? Is it related to L2 MEV or decentralized building?
Suave is Flashbot's really ambitious longer-term play. You can think of it as a separate, dedicated network designed for low latency and private computation.
Private computation.
Yeah, using things like trusted execution environments or T's secure hardware enclaves like Intel SGX or AMD SEV. The idea is to create a decentralized platform where computationally intensive and privacy-sensitive tasks can happen off-chain, but verifiably.
And how does that help with MEV?
One of the key potential use cases for Suave is decentralized block building itself. Imagine searchers and builders submitting their strategies and bids into this private Suave environment. It could potentially offer better privacy, prevent information leakage, and facilitate a more fair and decentralized auction process, maybe even across multiple chains, L1s and L2s.
So Suave is like trying to decentralize the MEV supply chain itself.
That's a good way to think about it. Decentralizing the infrastructure that searchers, builders, and potentially even proposers rely on. It's about making the whole system more robust, open, and censorship-resistant in the long run.
It definitely sounds like Flashbots is playing the long game here, really thinking deeply about these fundamental issues of decentralization and fairness.
That's absolutely their stated mission. They consistently emphasize that they don't want to impose their own values, their own utility function, or legal interpretations onto Ethereum. The goal is maximum censorship resistance for the base layer.
And open source is key to that.
Critical. Open sourcing the builder, the relay code, contributing to Suave. It's all aimed at preventing lock-in and empowering the community to build and maintain a decentralized system. They also talk a lot about open order flow.
Meaning no special backroom deals.
Exactly. No exclusive arrangements between, say, a big wallet provider sending all its user flow to one specific builder in exchange for a cut. Keeping the pathways open and competitive is key for fair execution for end users. And they also mention programmable privacy as another tool.
Giving users more control over their data.
Yeah, allowing users to perhaps reveal less information about their transactions initially, enhancing their bargaining power in this MEV-driven world. It all ties back to this core theme, constantly fighting against the natural gravitational pull towards centralization in these complex systems. MEV solutions are a huge part of that fight.
This has been incredibly clarifying. It really puts MEV into perspective. So just to quickly wrap up the key takeaways, MEV isn't just some niche technical thing. It's a fundamental force on active blockchains like Ethereum.
Right. With both good aspects like efficient arbitrage and potentially very bad ones like centralization and censorship risks.
And Flashbots emerged as this key player, first mitigating the worst POW issues with MEV Geth's auction.
And now, pioneering the proposer-builder separation model for proof-of-stake with MEV Boost, aiming for a more decentralized and accessible way to handle MEV extraction.
We talked about the clear benefits, potentially higher staking rewards, making Ethereum more secure, and these exciting side effects like enabling account abstraction, which could be huge for developers and users.
But also the ongoing critical challenge of keeping the builder layer itself decentralized. That's the next frontier, really.
It definitely feels like understanding MEV, PBS, and these dynamics is becoming essential knowledge. If you're a developer building a DeFi app, or even just a user transacting regularly, this stuff directly impacts you.
It really does. And as you, the developers listening, continue to build, thinking about how MEV might affect your users and how evolving solutions like PBS might change the design space for your applications, that's crucial.
Absolutely. So a final thought for everyone listening. Keep watching this space. Consider how these solutions for managing MEV will shape the future user experience and the very architecture of decentralized systems on Ethereum and beyond.
Yeah, and if you want to dig even deeper, definitely check out resources like mevboost.org for tracking adoption, and the Flashbots, documentation, and research papers. They're very open about their work.
Great recommendation. Get informed, form your own opinions. This is a vital conversation for the future of crypto. Thanks for joining us for this deep dive.